Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at pretty much just a dead sideways range trade here on gold, but just got triggered in short. I got short 5 contracts here, 1304.9. Let's get the stop placed here, 1305.6. We'll place our buy stop for 5 contracts. First target's going to be 3 contracts off, 1303.5. And we're taking 2 more contracts off right back at the lows of the range here for a total of 5 contracts on the way down. Now, the reason I like this trade, you can see gold today has just been an absolute wreck. Even from this morning, 1 o'clock or so this morning, Eastern time, dropped really, really heavily. Nice little pullback to a sell down again, but ever since then, it's just been absolutely dead. It's gone nowhere since that low at 4 o'clock. I mean, we're coming into 9 o'clock now, and nothing has happened. We're just very, very chopped up and sideways. We're ratcheting back and forth between tops, bottoms, top, bottom, and we're just kind of rotating back and forth. So we're actually coming off of the highs of this consolidation area, and the reason I really like this setup is the buyers attempted to go up several times here, and you can see they kind of flatlined right where my stop is now, where the buyers just didn't have what it took. They attempted to pierce the highs there, and we were actually still in forming process. My line earlier was actually off these highs through here, giving us this area up here. But then we started to see these lower highs coming in, so we started ratcheting it down a little bit just to kind of meet these highs through here, then these highs. And the reason it's down to where it is now, 1305.6, is because this area right here. We can see that it formed almost another little range inside the range, but we leveled off once, twice, 3, 4, 5, 6, 7 times on that exact same level. That tells us that there is at least somebody defending that area, 1305.6. So our stop is right there now. Now, normally that would be a very high-risk spot for a stop, but we actually had a little bit of a bull trap fire off right at these highs here with this previous candle. So that's why my stop is above there now. I'm not anticipating the market to come back to retest that area. Now, on the way down, because we've got several different areas of consolidation, we've got a small little area here, we've got a bigger range through here, and we've got the biggest range all through here. I want to be a little bit conservative with my targets, so I'm taking 3 off right here. Then that way, if we do decide to break through that and continue falling lower, we've at least got the 3 off right there. Final target down here, back at the lows of that range if it decides to kind of cycle back down to the lows. And then when we're back at the lows, we can look for another opportunity to become a buyer and go right back up again. But until then, right now we're short 5 contracts at 4.9. Our stop is 7 ticks away, so very, very small risk. Our first target is all the way at 14, so we're 2 to 1 regardless of what we do, but our final target is all the way back down to the lows at 23. So what that means is if this trade does work out to full target, we're looking at 14 times 3 plus 23 plus 23. You're looking at $880 on the trade on what normal people would consider a very difficult day of trading for gold. Very sideways, and these are the types of market conditions that are extraordinarily difficult to trade, especially if you're not really sure what you're doing or you're looking for a range style strategy, a continuation style strategy that just doesn't work very well. Now, we haven't gotten any targets taken out, so I'm not going to blow my horn too soon here, but we are getting a nice bull trap near the highs of consolidation. Our stop is only 7 ticks away. Risk reward is already way, way bigger than 2 to 1. So we'll see what the sellers want to do in this case. If they want to drop it down to the lows, if they do drop it down to the lows, I would anticipate it just to cycle right back up. But we'll see what they want to do. So we'll be back in a little while, and we'll see how the trade turns out. All right, coming into that first target, actually just got it filled. Wonderful, perfect. So let's drop our stop down 2 contracts, get that to break even here. And actually, we can go 1 more ahead of that if this candle closes here. Well, we got about 3 minutes for that candle to close, so we'll stick it with break even. Let's adjust that so we can see what's going on here. So we got short 1304.9. First target came off here, 1303.5. Took 3 contracts off at 14. So far, 14 at 3. We're already sitting on 42 ticks on the trade. So already we've hit our potential that we like to hit on trades regardless. So this is a really nice place to be. Now our stop is at break even. Free trade, looking to make another couple $100 on the way down if it wants to go there. That's why I was a little bit more conservative on these lows, though. You get these cycles where it kind of breaks back through and has kind of a hard time here, and we just want to prevent that from happening, and that's kind of what we are doing by taking our profit a little early here and splitting our targets. So we're in a break even still. I will start trailing my stop down as these candles close, just to be careful, especially with these multiple little inside ranges inside the big range. The last thing I wanted to do is cycle back, stop me out at break even, and then go down into our target. So I want to be sure to be a little bit conservative, but at the same time, while giving it room, we still want to tighten it up to risk or take the risk off the table of getting a kind of a bad trade. So first couple contracts are off the table. Looking for the final contract down here back at the lows, 23 ticks. Yeah, we'll see what the sellers want to do if they want to continue. I'll be sitting on a pretty hefty profit, so we'll be back in a little bit. All right, we're back. Just wanted to do a quick update. The sellers came down and tested this intermediate low right here and then bounced a little bit higher. So we're seeing a little bit of defense from these buyers. So what I'm going to do is instead of leaving our target right at the low, I'm actually going to go up to the low of that candle there and see if they have what it takes to come down to those lows once again. It's not going to affect the profit target too much. It's only 2 extra ticks, but looking at a final target of 21. And again, the only reason I'm looking at it that way is just because we're bouncing at this low back here at 1302.8, and I don't want to get stuck into a trade where it comes down 2 ticks from my target and then reverses back up. We may still very well blow through the lows, but I don't like how that looks. Catching that little bounce at 2.8 is not what I want to see, especially on the way down. Coming down and testing it, and there we go, got it filled. Beautiful. So was a little bit more aggressive on my target overall, but I felt like it needed to be done. We may still blow right through it and go down another 10, 15 ticks, but I just don't like sitting on it when it bounces off of a possible range, especially when we're creating constant inside ranges here. Not a place that I want to be sitting. So got a couple ticks less than what we wanted to, but we had 42 before. Tack another 21 and 21 on there. That's actually 42 by itself, so 21, 21. That gives us 84 ticks on the trade, $840 on a relatively straightforward trade. Almost nothing to it, just kind of fell straight down into our target. Exactly what we love to see, especially on these sideways days. So that's going to be the trade for today. $840 on the trade. If you have any questions about it, feel free to send an email to School of Trade, and don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.